Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Zulaika Ahmad Sam. My ID number is 209227752.
My name is Nur Aina Syamimi binti Azmi and my ID number is 2019249952.
Hi, my name is Nur Aina Jiha binti Azmi. My ID number is 2019239028.
My name is Siti Shahirah binti Burhan and my student ID 2019432912.
Hi, I am Sharifah Nur Shafiah binti Said Muhammad Basri and my number is 2019408664.
I'm Shazwin Aizi. My ID number is 2019262458.
Today, we would like to present about finance gap between Islamic banks and small medium enterprise (SME). A finance gap can be detected when one takes a careful look at the existing relationship between Islamic banks and small medium enterprise (SME). Commercial banks are the main external capital provider in the SME sector in both developed and developing countries. Different from its counterparts, Islamic banking is a banking system that is Sharia compliant. It follows what is called as fiqh muamalat or Islamic rules on transaction. The rules and practice on fiqh muamalat come from the main sources of Sharia such as Quran and the Sunnah. Islamic bank can be defined as a body running banking operation that abides by Sharia, under which a key rule is the prohibition of interest or riba. Islamic banks cannot engage in haram activity prohibited under Sharia, and Islamic banks must also minimize error or ambiguity and avoid measure or gambling in their contracts. In many majority Muslim countries, Islamic banking assets have been growing faster than conventional banking. According to World Bank, 70% of all SME in emerging markets lack access to credit. While the gap varies considerably between regions, it is particularly wide in Africa and Asia. The current finance gap for former SME is estimated to be $1.2 trillion, which is the total finance gap for SME is as high as $2.6 trillion. World Economic Forum report that SME worldwide account for more than 16% of employment and 50% of GDP in high-income economies. They are equally important in emerging economies where they contribute on average to more than 50% of employment and 40% of GDP. But even though SME plays such an important role in the global economy, they have been struggling to obtain reliable access to financing. IFC Enterprise Finance Gap database based using primary data from World Bank Enterprise Service quote that between 55% and 68% of SME in developing countries are either financially underserved or not served at all. These high numbers translate into significant lost opportunities to develop viable business. Even in the G20 countries, it is estimated that SME face the financing gap of $1.3 trillion. The G20 is an international forum for the governments and central bank governors from Argentina, Australia, Brazil, Canada, China, France, Germany, India, Indonesia, Italy, Japan, Mexico, Russian Federation, Saudi Arabia, South Africa, South Korea, Turkey, United Kingdom, United States, and the European Union. SME have been key drivers that contribute to the economic system and economic growth. In developing countries, small medium enterprise SME hold the largest share of employment with a contribution to the global labor market. In Malaysia, SME access to financing is provided in various institutions of both Islamic and conventional. However, SME have high rejection rates as they might lack documentation, insufficient cash flow, and vague business plans. Moreover, SME owners are doubt themselves to make loan repayment, as financial institutions providing higher financing costs that do not meet their small business capital requirement.
Issues such as a lack of branches, a lack of product knowledge, a limited product offering, less promotion, and a lack of market information, and also a risk consideration has led Islamic banks to the grey zone. When it comes to SMEs, the majority of them lack experience dealing with Islamic banking and financial products. They are also unaware of Islamic banking activities, such as the products and services provided by Islamic banks and the Sharia laws imposed by Islamic banks. Short-term funding is preferred by SMEs over medium and long-term financing, and because most equity-based financing products are for a longer periods of time, Musyarakah is considered as unsuitable for their financial needs. So these are some of the elements that contribute to a financial gap between them. As a result, there have been certain difficulties in implementing Islamic banking for small and medium-sized enterprise. Firstly, product offerings. Islamic financial products for small and medium-sized enterprise are more heavily weighted towards debt financing, such as murabahah, while there are other products available such as musyarakah, mudarabah, and ijara. Murabahah is more suited for specific financing purpose, and these products offer a more beneficial profit and loss sharing structure. As a result, there is no diversity in terms of financial products available to meet the financial demands of SMEs. There is a need to shift away from depending solely on debt-based financing and towards equity-based financing. They do not participate aggressively in equity financing due to risk issues, and as a result, they have conducted less promotion for equity-based financing. This has resulted in a financing gap between Islamic banking and SMEs. Secondly, regulatory frameworks. One of the most significant obstacles for Islamic banking products, whether for SMEs or other platforms, is the absence of a regulatory framework for financial products. When it comes to conventional financing, regulatory regulations are more regulated and standardized, which make their products more marketable and easier to follow. Islamic finance products are less standardized as there are no Islamic finance specific standards. The majority of Islamic finance products adhere to regular banking norms and rules. Thirdly, knowledge and information. Entrepreneurs' awareness and availability of Islamic financial instruments, particularly at the startup level, remains low. This has created a gap between them and Islamic banks due to their lack of information about financing facilities available in the market. This could also be due to the limited number of Islamic finance products available, as well as the fact that Islamic finance industry is still in its early stage when compared to the conventional bank. Islamic states such as Malaysia, Indonesia, and others are establishing full-fledged Islamic finance institutions, which will result in a stronger Islamic financial ecosystem. Lastly, transactions costs and non-movable collateral. In terms of Islamic finance for small and medium-sized enterprise, the transaction fees and tax are relatively greater than those associated with conventional financing. This could be due to Sharia verification procedures and complex tax requirements. Additionally, the fact that small business face the issues of non-movable collateral cause Islamic banks to be hesitant to finance small and medium-sized enterprise in general. This is one of the reasons that lead to the grey zone of Islamic banking and SMEs. As a result, a strong legal norm is required to permit SMEs to employ their movable tangible assets.
Next, there are several opportunities and advantages regarding Islamic banks and small-medium enterprise SME, even though there are several traits that contributed to the finance gap. As we know, the reason people choose Islamic banking instead of conventional is because of several advantages such as justice and fairness, transparency, discouraging speculation, and banking for all. Islamic banking and finance are commonly recognized as banking systems that conduct their operation and activities solely in accordance with Sharia rules and regulations. There are various practices in Islamic financial institutions related to Islamic SME financing in various countries. One unique feature of Islamic banking and finance is the profit and loss structure, whereby all assets and liabilities are integrated. Islamic banks are regarded as a strong platform for supporting SME in accessing financing. According to our research, SME or Startup Foster Entrepreneurship will boost economic growth in the Islamic banking and finance environment. International banking items like Murabaha, Mudarabah, and Qardul Hasan appear to be more suited for startups and other similar firms. For instance, in the case of SMEs, shows that 95% of all financing of SMEs in 2003 were approved based on Ijara, Baik Bisamaan Ajil, and Murabah financing schemes. Besides, the first bank in South Africa Al Barakah Bank, was created in 1989. It provides zero interest loans and acts as an intermediary where profit and loans are shared in their business methods. Then, a lending framework is an essential component of encouraging SMEs to lend with Islamic financial institutions and increase the number of borrowers. Furthermore, clear cost information help persuade SME to choose funding for their firm. Apart from obtaining funds from borrowers, it has the potential to increase the transparency and reputation of lenders in Islamic financial institutions. Next, nowadays, depositors and bank clients are looking for a bank that can meet their financial demands and respond to all inquiries. Therefore, advisory services are critical for increasing profitability and market share. Furthermore, with the increase and global visibility of Islamic financing, SME should take the opportunity to stand out as Islamic finance, which can assist and promote the industry of SMEs. Furthermore, in Pakistan, the prospect for Islamic banking is highly promising. Islamic banking is now recognized as a distinct institution from conventional banking. For Islamic finance to contribute to the long-term prosperity of a country's SME, it must regulate the goods it offers on the market. From our research, the Islamic banks can develop the specific product and service for SME. Also, Islamic banks can play a role in the awareness of their product. In the aftermath of recent global financial crisis, various financial institutions have stated that Islamic finance is more stable than conventional finance. Furthermore, Islamic financial institutions are regarded as a good platform for expanding access to financial inclusion, especially access to finance for SMEs, hence promoting development and economic growth.
Based on the article World Economic Forum in 2015, How Islamic Finance Can Grow SMEs, they state that from the smallest rural village in Bangladesh to the large, bustling metropolitan centers of Cairo or Istanbul, small and medium enterprises SMEs are the lifeblood of Islamic communities around the world, keeping local economies humming. The Islamic finance industry has grown rapidly over the last decade, with annual growth rates of more than 15%. Islamic financial assets are now valued at more than $1.7 trillion. Islamic banking assets have grown faster than conventional banking assets in many Muslim majority countries. Non-Muslim financial centers such as the United Kingdom, Luxembourg, South Africa, and Hong Kong have also expressed interest in Islamic finance. For example, the World Bank, in its capacity as treasurer for the International Finance Facility for Immunization, has contributed $700 million through to Sukuk issuers. Mobilization of financing through non-banking channels such as private equity, venture capital, and capital markets provides innovative assets and equity-based financial products that address the shortcomings of bank SME financing. There must be imperative for policymakers and development practitioners to unlock the potential of Islamic finance. Although key standard-setting bodies such as the Islamic Financial Services Board and the Accounting and Auditing Organization for Islamic Financial Institutions have made substantial progress, the regulatory framework, supervisory processes, and standards for the industry have yet to be fully formed and implemented. Addressing these challenges effectively will put Islamic financial institutions in a position to design and offer financial products that are relevant to SMEs, while reducing transaction costs and adequately securing their exposures. Islamic finance has relevance across the range of development solutions at the World Bank Group deliver. In 2013, a Global Islamic Finance Development Center has established in Istanbul. The center serves as a knowledge hub spearheading a wide range of research, training, and advisory activities aimed at improving general understanding of Islamic finance globally and supporting regulators and policymakers to introduce and maintain sustainable Islamic finance industries.
First, SMEs should be managed by separating the department for SMEs in every Islamic bank so that all problems would be focused within one center. The standardization of documentation and contracts that compatible with Shariah's requirement should be practiced to improve people's sensitivity and awareness of SME financing. Thus, to balance the bias and enhance Islamic SME financing in all parts, some policies reform according to Maqbul and Hassan 2017 should be done, and the proper framework should be developed thereafter from Huda 2012. Second, standardization in contracts, accounting, and documentation must be practiced, and information technology need to be compatible with Shariah requirements. This practice shall enhance financial returns and performance as well as improve governance. The standardization of Shariah compliance must be extracted from 4 primary sources, which are the interpretation of Al-Quran, interpretation of Hadith, ulama ijtima, which is the consensus among scholars, and lastly using qiyas, which is the analogical deduction or individual reasoning for specific problems according to ULA 2014. Third, the main activities must be aligned with Shariah compliance. Majid and Zainab 2017 firmly suggest that Islamic finance business must prohibit from interest because it represents the money earned without putting any effort. Proper Islamic financing system that align with Sharia compliance is based on fair risk sharing. The predetermined ratio of risk between lender and borrower needs to be involved in Islamic financial contracts and transactions. Fourth, the businesses also need to focus only on legal business. The practice of asset-backed finance and easy access to Qardul Hasan is also one of the best ways to properly practice Islamic financing. The criteria highlight must be parallel with the guideline established by the central bank, securities commissions, and authorities responsible so that the standardization could be done and centralized to all standards needed. Fifth, human resources have to be well prepared with the basic of Islamic finance that aligns with Sharia compliance. ULAH 2014 and MIFC 2016 suggest that every Islamic institution need to hire a Sharia expert, prepare a proper training to do the tasks related to Islamic finance, and have a strong fundamental of Sharia background. The central bank also has to create special supervision that only focuses on Islamic banking and related issues. Therefore, this issue has to be taken care by proposing an appropriately skilled employee that work within the industry and offering globally recognized qualifications to properly train to understand the requirements for Sharia compliance and deal with the difficulties of Islamic commercial law. Last, government and the owner of SMEs should be aware of the promotions of Islamic banking products that offered by Islamic financial institutions. The government and Islamic financial institutions should provide a framework, graphical flyer for promotion and flowchart on eligibility and apply for Islamic business loans at Islamic financial institutions.
Though there has been much fact talk on this topic, it is clear that the consistent growth of Islamic finance industry has increased demand for Islamic financing, particularly SMEs handled by Islamic financial institutions as the main lender. Some difficulties should be addressed in order to boost the development of SMEs as their numbers increase and their growth accelerates. Due to the obvious report and news stories published by the government and SMEs, Islamic SME financing is perceived to have weak management, despite the fact that small and medium-sized enterprises are widely acknowledged as the backbone of economic growth in the country. They appear to have limited resources to expand their operations. SME finance options and operational assistance from Islamic banks in particular could be exploited by the latter. However, the occurrence of the finance gap could not have been caused solely by the Islamic banks. Overall, industries that play such a significant role in the national economy should seize every opportunity to expand their operations while still maintaining their individual company operations over the long term, according to the World Bank.